People always want to know what the best way to invest in crypto is. And I get asked this a lot, even though, as you know, I am not a financial advisor. Nevertheless, I thought we'd take a brief few minutes just to talk about what is widely considered by experts to be one of the most effective investment strategies for yielding healthy long-term gains on an asset that is long-term good. Now, you'll likely know all about buying the dip and the dangers of FOMO and the risks of getting wrecked associated with it. However, for those who truly believe in the long-term success of cryptocurrencies and pack the hardest of diamond hands, there is only one tactic that me and many of my colleagues who do crypto for a living 24/7, 365 always fall back on. So today we are going to be talking all about DCA, or dollar cost averaging. Put simply, dollar cost averaging is an investment strategy geared around the aim of mitigating the short-term price volatility of an asset. It could be a cryptocurrency like BTC or ETH or Doge. Maybe not Doge. Or it could be any other asset class, equities, commodities, you name it, that often show short-term price fluctuations. Now, we all know to buy low and sell high, but actually doing so is an art that few have mastered. In reality, information is imperfect and often asymmetric. What's more, time, manpower, and effort are all valuable resources in their own right. In short, perfectly timing the market is practically impossible, especially for the retail investor. Okay, example time. It's March 2021, you've been doing your own research, watching some great Coin Bureau videos, admiring the panache, style and easy charm of the presenter, and having done your own in-depth analysis, you decide that ETH is a great asset that is likely to experience strong gains over the long term. Nice choice. Consequently, you've decided to dollar cost average with a fixed sum into Ethereum on the first day of each month for the coming year. That is, from March 2021 to March 2022. Here's a chart. Your investment in November would have been made at near all-time highs, around the $4,400 mark. Similarly, your allocation for the start of December would have been made at prices of around $4,600. Now, if you had made your entire investment for the year at either of these points, perhaps because Ethereum was pumping hard at the time and you wrongly expected it to continue, or you were caught in the icy grip of FOMO, you would now be operating at a painful loss. Indeed, at the time of filming, you would have lost nearly half of your investment. No! However, as you DCA'd throughout the year, your allocations for April, July and August would have been made at prices of around $1,900, $2,100 and $2,550 respectively. Effectively, these positions entered at much lower prices would have mitigated the poor entry points experienced during the late year pump. Your low entry points have basically offset your higher ones. Now, in essence, the price volatility for Ethereum over the last 12 months would have been suppressed by the emotionless Terminator-esque investment strategy used as a result of your long-term belief in the asset. Your lower entry points in some months would average out with your higher entry points in others to provide returns that are not as strong as if you had invested everything at yearly lows, but much better than if you had FOMO'd in at the highs. Now, naturally, your investment would have performed better if you'd invested all of your money on, say, the 25th of March 2021, when ETH was below the $1,600 mark. However, it would have been nigh on impossible to predict at the time that this would constitute the lowest point to enter the market over the 12 months from March to March. And if you did manage that, call me, let's talk. But it's not just dollar cost averaging's ability to mitigate volatility that could make it an appealing strategy. DCAing is not a time-intensive process. Quite the opposite, in fact. It's very much a set and forget strategy. While day traders will spend hours on end watching price charts and looking at news events, the dollar cost average investor can spend their saved time researching alternative assets or even just, enjoying life. What's more, deciding in advance exactly when you will buy and how much you will invest, you're able to effectively remove emotion from your strategy. And as we all know, emotion can be a dangerous thing when it comes to cryptocurrency investing, especially if your hands are weak. Now that said, there are some downsides to employing the DCA strategy. The first and most obvious is that if you could time the market perfectly, you could have a chance at getting more bang for your buck. However, as we've seen, this is a very difficult thing to do. And what's more, committing to invest in an asset for a long period of time requires no small degree of faith in that asset's underlying value. Your research and due diligence should be intense and rigorous enough to provide a high degree of confidence in long-term performance. And finally, the discipline involved in dollar cost averaging is no small ask. There may be times when the cryptocurrency in question is looking shaky, with FUD flying all over the place. Stop that. Conversely, said asset might reach crazy prices at which you feel uncomfortable buying. Now, the dollar cost averager must overcome these emotional factors and remain disciplined in their investment plan. So, in sum, dollar cost averaging is a widely respected trading strategy, and if you have long-term belief in a particular crypto, limited time to spend on research, and a desire to mitigate some of cryptocurrency's famous volatility, then, my friend, it could be for you. I hope you found this DCA breakdown interesting, and do let us know in the comments section below if there is another particular strategy you would like us to look into next. And have you got a strategy that's made you richer than sin? Like I said, call me. Thanks so much for watching, folks. Don't forget to like and subscribe to the channel for more short form content like this, and I will see you soon.